Good morning. We're here to study VPHM in light of my valuation model. We'll start by just checking the charts on a brief technical analysis. This is the all history chart since the company's IPO in 1996, and the stock had this huge bull run here on the 2000 bubble. This is a biotechnology company. Then it collapsed here to less than at about $15, and then another collapse here to about $1, trading at 60 cents now. $15.60 now. Over the short term, well, this has been quite erratic here. You can see this big debacle in early 2006, then coming back to almost $19, then another sell-off. So it doesn't have a medium-term trend. You can see here it is just below the 50 days moving average and above the 200 days moving average. Now really over the short term we have this head and shoulders possibility, which is a top pattern, but it's just a possibility. It would have to break down below this neckline here at 13.82 to be confirmed, so we can still move higher from here. Let's check the fundamentals. This is the number of shares outstanding and market cap since 97. These red bars are the number of shares outstanding, which were 11.5 million in 1997 and 69.8 million now. Well, there was heavy dilution, as you can see here, until 2005, but not much beyond that. It has remained stable since 2005, since the company turned very profitable. The market cap now is $1 billion, almost $1.1 billion, as you can see here, and the share count compound annual growth rate since 97 grew 19.8%, and the market cap grew 18.3% on average since 1997. So the share price is just a bit below 97, as we can see. Where was that chart? 97, well, yes, you can see it was about here, just a bit below. So market cap is about 5 times larger, more than 5 times larger, yet the share price is lower than what it was in 97. So the number of shares outstanding is very important on a stock's valuation. Let's move on. Here's the balance sheet. The company had some long-term debt here in 2000, 180 million, and now zero long-term debt, and the current ratio is currently 24, which means current assets are 24 times larger than current liabilities. So this is a very healthy balance sheet. That's why the company stopped diluting shareholders' value. And moreover, cash and marketable securities account for 89.44% of total current assets. So very strong balance sheet for VPHM. Moving on. Revenues, here we have them. They were really incipient here until 2004, when they were 21.4 million, 132 million in 2005, 167 million in 06, and expected for 07, 204 million. But for 08, analysts are expecting the revenue decline to 192 million due to generic competition. And the gross margin has remained very high here, around almost 90%, since this is a biotechnology company. Revenue compound annual growth rate since 2000, when it was just 2 million, has been 109%, and the industry average grew just 11.8% since from 2005 levels. This number. Gross margin for VPHM 88%, for the industry average 94%. Price to sales ratio for our company 6.55, and for the biotechnology industry average 16.5. Well, let's move on from this. This is earnings per share and net profit margin. The company lost a lot of money here, as you can see, since 97 until 2004. That's why it diluted shareholders' value so much. In 2005, it had this big profit of $2.02, but probably there was some special benefit here. And 95 cents in 2006, expected 407, $1.05, and 408, 91 cents, so below what it was in 2006. Analysts are really afraid of generic competition for vancomycin, its main drug. Net profit margin 40% for VPHM. The price to earnings ratio, considering 2007 estimates, is 14.9 for VPHM and 33.9 for the industry average. So our company seems to be trading at a deep discount when compared to its industry, but that's because of this fear of generic competition and no revenue and earnings growth, or almost no growth. On my valuation model, I consider the dilution factor of just 1% because the balance sheet is very strong, and perhaps it will be just zero dilution, which would mean a dilution factor of 1. And the initial revenue, 167 million. This is the 2006 revenue. Revenue compound annual growth rate expected for the next 3 years of 10%. Perhaps I'm being just a bit optimistic here when compared to other analysts. And initial net profit margin 39.9% in 2006. I expect this to continue at 40% going forward. And earnings per share multiple estimate, I put here 20, but the current earnings multiple is just 14. So also maybe a bit optimistic here, but well, I don't know enough about the pipeline of the company. There can be some more growth initiatives, but for now, this is what my model can give, a bit of a best case scenario. And I get a share price compound annual growth rate of 16.5% going forward for the next 3 years, and this is just barely above my minimum threshold of 16%. So I consider the stock attractive, but just barely. And my optimal selling price would be 15.84, and the stock closed yesterday at about 15.65. So it's not worth it. But so on a where is this? Sorry, on a 1 to 10 scale, I give VPHM a 7. Because 16% return is nice, but I'm looking for better than this for the main portfolio. So thank you, bye.